So making a video on how to break down a chart. Now, first glance, it's looking at a daily chart, you would think the trend is down. But what you got to start off with is a quarterly chart. Currencies move in quarterly and monthly and weekly trends, and mark all the support resistances here. So I mark this supports here, this level here. That's this resistance, and currently it's flat. Looks flat, but it's looking at a line chart. It seems, even though it's flat, it seems to be moving up over the years, right? So let's put our support resistance there. Whoops, supports and resistances, and this is what we come up with here. Right, this level here, here, this level up here too. Something, right? Made it higher. Looks like it's making higher. Make it higher than those, but then this is the high here. That's the high. We made a higher low. Right? It was moving down. This is a little bit too far. And it made one lower low, and the lowest low it made was back in 2016. And didn't see that low ever since. We're in between this range here on a quarterly chart, right? So you would think that on this quarterly chart, there's no trend, and there is no trend anymore on a quarterly basis. It's just flat. If you try to trade this, you're just going to lose money. Putting other indicators in here, you see that all lines are going flat as well. So what we have with many times in currencies, this is what you're working with. Just lines consolidating on a quarterly basis. You rarely have something like this on this side here, where you can exploit a trend. Here, all the lines are meeting in one place. Prices below the cloud, prices in between the lines, consolidating between support and resistance. You see the Bollinger Band squeezing. Over the years, it just became, since 2021, it just became flat. Um, when it went above the Bollinger Band, one deviation, maybe that will last 1 or 2 quarters. And it did last 1 or 2 quarters. It does it all the time. Close down here lasts a little bit. Doesn't last. So you maybe on a micro scale, a micro trend, you can exploit this, but not definitely on a quarterly basis. And it's really pushing your luck if you're going to try to trade this any other way. This would have been the first pullback attempt to sell in this quarter. Yeah, it went down for 1, 2, 3 quarters. That's it. Found support and we just consolidated ever since the year 2000. So what we will have is probably a micro trend. Let's go to a monthly chart now. Again, same thing on the monthly charts. We have consolidation, and we see our indicators just going haywire here. However, what's interesting here is this here, a break above the cloud. On a quarterly basis, you're below it, but on a monthly basis, you're above it. So you have a micro trend here for a quarter, for a whole quarter here. 1, a breakout, 2, 3, 4, 5, and then break down on this in this block. If you're looking at a daily chart only, you would in this monthly chart, mark this monthly chart here on September to October 2023. You're only looking at a daily chart. You would see the you would look at this thing from September to October and think that, oh, this is a downtrend. And maybe if you're trading intraday, yes, but if you're looking at a daily chart, no, this is just consolidation, a big consolidation here. Because what matters on a quarterly basis and a monthly basis are quarterly horizontal support resistance, monthly support resistance, and weekly support resistance. That's what matters on a midterm to long term here, and that's the type of trend lines that I'm marking here. Right, you see, on a monthly basis, we have higher highs and higher lows. Right, this is nothing here. Right, so when we go to a daily chart, we look to see if we breached any lows, and we haven't. We just have consolidation up here, but no major lows. We have support here. We have cloud support here. We mark that. And we see why the price just suddenly stopped in midair. It didn't even go to the Tenkan here. It just stopped. It stopped right before the Tenkan crash because it's a monthly support zone here. And back here, it's monthly support zone. So we can mark it. It's an important level. And we are above the cloud here. So, if this is why it didn't follow through. It felt support here. Now when we go to a daily chart, this is 20 bars here. At least 20 bars. We see why it stopped there. Stop right here. Right? And it made a breakout right here. A breakout of this higher low here. Or this zone here. This double bottom breakout. And it pulled back. So would you short here? I wouldn't want to short here because from a monthly basis, we are in an uptrend. So it's tempting to look at this and say, okay, we have a wicked daddy pullback below the cloud. Let's take a short. Well, in reality, it's very dangerous to short here. We had a breach of we had a DQ here. Price went up here. Yeah, we'll be thinking of shorting right there. Taking a short right at this level here, 50% level. Yeah, it's tempting, but it's just something that we shouldn't do. We should follow the monthly trend, weekly trend. And we can follow weekly support and resistance. Well, we see on the weekly chart, when it went to that monthly line here, monthly line of support, what we see here at the end of this 5 week, 4 week, 5 week retracement, right? We see a morning star. So we would enter on this morning star here. And here, at the end of it, would be our entry. And we most likely will still be in it because we will be thinking this is a pullback here. This pullback was a 3, a 3, 2, but it was a 618 pullback. A 618 pullback. A 618 pullback at support, right? And our stop loss could be under this swing low here. Right? You need to target a 1-to-1. target that high. That's what it seems to be doing. Making a low, target a high, pull back. Making a low, target, uh, pull back, and then make a new high. Making a low, target the high. Maybe here we'll pull back. So same thing is going on. So it becomes clear what's going on when you start with a higher time frame marked as support and resistance levels, of the quarterly, monthly, and weekly chart, and see if you have higher highs and higher lows going on those time frames. And then when you go to a daily chart, you can take your cues from there. You can decide whether or not you should short there on a daily chart. Because the monthly chart, this one bar here, this one bar here is 20 bars on a daily chart. It's nothing, right? It looks big, looks ominous on a daily chart, but it's really nothing on the larger scale. So we have to trade. We have to look at that. And resist the temptation to trade counter the trend. Yeah, because this definitely would be counter to the trend. Even though we have this breakdown here, right? It's not a valid breakout. It's not a valid breakout. We like trade the short, but we probably will be tempted to short this shallow pullback here. And yes, it will be a profitable one, or when it goes 1-to-1, but this is too close. The probabilities are lower that will move in our favor because we're going against the monthly chart, monthly trend here, right? It's just like we're forcing a trade short here. So we see this engulfing pattern. We short here. Our stop loss probably go there. And we would want to go for a 1-to-1, right? Or when it goes to 0.5, move stop loss to break even. Yeah, if we did take a trade, this will be a profitable one. Yeah. It's too much. It's too close. Too close. It's better to trade in the direction of the bigger time frame, weekly time frame, monthly time frame, quarterly time frame, right? And if we look at this here, this is not a valid short because the daily standard deviation 1 is engulfing the midband of the weekly chart. So, this wouldn't be a valid short. However, the exception to the rule is that if the price is in the G-test zone, double G-test zones, then we could take this trade. So we would take this trade. This will be an acceptable trade here. Uh, uh, but this will be an acceptable trade short, and it would have worked out. It would not go to 1-to-1, but it would go, half to our target. But we would be out this trade because it would hit our break-even level. Yeah. So yeah, this is something to watch out for: support and resistance of a higher time frame. We're using when you're trading a daily chart. This would be a monthly BBT. Look at that, a monthly BBT. Monthly BBT here. So something to be aware of as well. So if we're looking at these levels on a daily chart, instead of counter trend trading, we can observe to see if it continues downwards, if we get stopped out here. Or if we're just watching it, see if it bounces from these levels, and it does. It breaks this high here after a double bottom, breaks this high. And then there's a pullback. Now we're getting a pullback here on this daily chart. And we would dare not to short here, even though it's tempting to short right now. I dare not short here. I prefer to purchase the instrument when it pulls back, and you can see we have a daily BBT here. The lines are changing. We have, if we remove the guppy wave here, it's not valid now. You see we get a TK cross, thinking Kijun cross here, it's positive. We get a pullback. The pullback is not a sufficient one yet. Let's see how far it pulled back. That's 618 down there. Let's see if we get a 38% pullback. It's not a 38% pullback yet. All right, I'm not going to trade a shallow pullback on this time frame here because of it's not the cloud. So yeah, we have the 38% pullback will be here. So if GBP NZD falls here, or in between this zone here, this will be a level to buy. Right? We already would have bought it on the weekly chart here. We would have bought it. Right? Our stop loss will go at the previous swing low here, or under this zone here. Right? Aim for the high, or down there. And if it does pull back to this area here, we would look for some type of rejection. We want a rejection here at this level, price testing the Kijun, right? And if we get the rejection on the daily Kijun, which is ideal here, if we get a rejection, then that's when we would think to take this trade here. Even though we're under the cloud, we're trading in the direction of the monthly chart, a weekly signal to buy, and we'll come back to test that weekly signal to buy. That's what we're looking for on a daily chart, and we'll buy this, even though it's not a perfect. It doesn't look good on the cloud is bearish here. Everything else looks okay from our analysis. I think if this continued to pull back, the Kijun here, you can see here, would breach the prices. That will be another point in the bullish direction. For now, you dare not to short this instrument. It's too dangerous to short here. I don't want to, even though this would be, I would consider this a wicked daddy pullback. I dare not short it at all. It didn't even make a new low. It did pull back 50% level at this area here, but it's just not good enough. I prefer to go long instead. There are no crown patterns here. There's no crown patterns here, so except the one going up. Right? We don't have a crown pattern going down. So this is how you dissect the chart using multi-time frame analysis to give you a clear picture of where prices may go. Another thing to note is what I observed is if the price comes down here to this zone and gets rejected, right? And we buy a stop loss, then we'll go under this low here, right? And we can target a 1-to-1 or even this high. However, if we're too scared to trade that, and the price breaks out above the cloud and gives us a pullback like that, then we can put our stop loss under the cloud. We don't have to put it all the way down here. Or we can put it under the previous swing low, which will probably be here, this area, right? Or in the cloud. And we can target an area up there instead of putting it way down here. So that's another scenario because this will be a state. This if it breaks up with a cloud, we're in a stage 2 area. We're in a stage 2 development. If we're in a stage 2 development, there's no need to put it way down here. We look for under the cloud, under our previous swing low, but not all the way down the head or center tip. Only in stage 1, only in stage 1, only in stage 1 development, which is where we are now, right, is where we would be very cautious and not put our stop loss under here, but under the swing low here. Because what can happen when it's with stage 1, if you get these swings here, and you get a double wave down here, and you have no support. Your support is this low here. That's your support. So we wouldn't know what it's going to do here. Wiggle down, and then zoom up. That can happen with stage 1 patterns. But with stage 2, the price just continues to rally and then comes down and finds support. We have a lot of support. We have a cloud support here. And we have a big cloud support here. So we don't need to put it way under here. Right? We have cloud support, we have FIB supports, right? We have plenty of support going forward. This was the problem I had when I was trading because I always wondered, okay, if I get a crown pattern like this, breakout, pull back, and I get a doji like we're seeing here on the daily chart or engulfing candle, I wouldn't like the reward to risk ratio, so I would move my stop loss closer to the candle to try to get profit. And well, what happened? Yeah, I would aim for 127% here. This is what I normally would have done. Just blindly aim for 127%. Right. So this will be my reward risk ratio. I'll say, oh yeah, 3-1 reward risk ratio. And oftentimes, when I see that engulfing candle, the price would just stop me out. Right? Come down to 618 or even 718 and then go up to my target and then keep going. Or with stage 1 patterns. Because I would always wonder, man, I need some supportive resistance. I would try to use the supportive resistance here, but it just wasn't good enough with stage 1 pattern. So with stage 1, it's better to put your stop loss under here, and you are ensured that you have support and support. You have 2 support levels: these break of the DQ level and the very low. Right? You have more chance. You give price more room in stage 1 to hit the cloud, hit resistances, right, and work out for you before it breaks above it, and do whatever it needs to do to consolidate and break out. But when it comes to, like I said, if it was already broke out from here, right, and then pulled back, this is stage 2 now. You have a lot of support. You have cloud support here. You have this area of support here. Right? If the price forms something, a wick here, you will have support here. You have this support here. You have 3 supports here. You have four levels of support, and you have your fib. So, if like I said before, repeating again, if it's stage 2, then when you enter somewhere there, then you can move your stop loss on closer. Right? It's just better. So that's what I would recommend. So we're waiting to see what price does in the coming weeks. Now it's October 25th. So we have 5 more business days before this month ends. So we'll see what it does. We'll come back. for now, it looks bullish. We have the TK cross here of the Kijun and the Tenkin right here. Uh, Now all we need is for the Chiku span to break across the prices. And most importantly, we need price to come to some level here, a fib level, support level, anywhere. This level here, and we want to see rejection, especially if it rejects I'm looking for is if it rejects this level here, the Kijun. That's really important for me. For the price to come down and reject off the Kijun. If it doesn't, I'm just going to be scared to take this trade. I will avoid this trade. Yeah. And that's basically it. Yeah. Now, before I made this video earlier, I was thinking about taking a short position before I looked at all this, but because I stopped and thought about this for a while, the multiple time frame thought about the price of fluctuation from a multiple time frame perspective in its relation with cloud and multiple time frame support and resistance. I changed my mind about taking a short here. I prefer to buy it. And I'm looking at patterns in addition to all these things. There's no pattern except one going up. So making this video helped me to get a better insight into my own strategy. Right, this is signing up, Rockman signing up.